Now, I'm going to talk about some technical analysis on the price of gold and has gold bottomed yet? And remember, it really isn't the price of gold, but how much it buys, its purchasing power, that's important. This piece of artwork here is all based, the geometry going on here is all based on numbers that a man named Fibonacci came up with. And Fibonacci is a very, you have no idea how much he affected your life. He published in the year 1202 something called the Liber Abaci, which translates to the Book of Calculation. And in it, he argued that we should be using the Hindu-Arabic numeral system instead of Roman numerals. So instead of counting I, V, VI, we count 1, 2, 3, 4, 5, 6, 7. Now, the importance of this is the Hindu-Arabic numeral system has the concept of 0 and decimal places, and that makes it possible to calculate interest and percentages. You could not calculate those with the Roman numeral system. And so modern business could not exist. Our level of existence, our lifestyles could not exist without this, and he was the one that brought it to Europe and made it so that most of the world used the Hindu-Arabic system. And what's interesting is that these patterns occur all over nature. And this is he came up with this series of numbers that's based on, it's called the Fibonacci numbers, and it's based on adding the previous two numbers, and you get the resulting number. In other words, 2 plus 1 equals 3, 3 plus 2 equals 5, 5 plus 3 equals 8, and so on and so forth. And what you see is these patterns that these numbers create existing all over nature. It exists in wave patterns and in bubbles, and here's this beautiful nautilus shell that looks to me like a jet turbine, like this was mathematically calculated and machined, not something where it's a living creature creating these calcified layers and chambers and then growing and moving on, to his last chamber. This is in perfect mathematic sequence, and this creature couldn't count. Yet, we see this in nature, and the importance of this is it governs herding patterns in animals also, and humans are one of those animals. So now we get to the price of gold, and the question, has gold bottomed yet? So here is the entire bull market from the year 2000 all the way to the peak in 2011, and the 4-year cyclical bear market that we have had within this secular bull. Now, I've been invested in this market since late 2002. And when I did this, I was reading articles and stuff, and I determined that I was not going to let this bull buck me off of its back. And it usually does, and it does so with things like this grinding cyclical bear market that we have been in. It causes people to give up and to sell at a loss, and then it turns around and runs away from them later. Right now, I'm seeing a lot of capitulation. I'm a precious metals dealer, and it just pains me so much when I see a client sell their holdings. It's just because for me, I believe just so wholeheartedly that gold is going to spectacular highs because it's got a central bank guarantee, and it's the only thing that has a central bank guarantee. The central bank has guaranteed, due to the mathematical principle of how the monetary system is created, that they always will print more units of currency. That's the guarantee that gold has, is that there will always be more and more and more dollars, euros, and yen out there that come chasing gold someday. Now we're in for a deflation where loans don't get renewed and where loans get called in, and the currency supply will contract a little bit. But the answer to that from all those Keynesians, these crazy Keynesians that don't know that their beliefs are wrong, and because they believe it's true just because they believe it, it's got to be true then. They are going to print and print and print until deflation gives way. And that just guarantees a higher gold price. And I made a commitment that I would not let this bull buck me off of its back. And so I've been buying all the way up, and I've been buying all the way down. This is for my personal accounts. I'm a dealer also, but that has nothing to do with my personal investment. Using this pullback I've been using this for accumulation. But have we seen the bottom yet? Let's put in some what are called Fibonacci retracements, which traders all over the world look at. And so these become sort of self-fulfilling. Everybody around the world is looking at this. We've already reached the 50% retracement, and it doesn't have to bounce exactly on it. It can pierce it by a couple of percent. But you see here how the 61.8% retracement falls right near this huge trading range that we were in back in 2008 until 2010. This is just part of our herding psychology. But gold has come down to this support level. There was a trading range here and this Fibonacci retracement at a time when we're seeing all of the economic problems that I just went through in a potential crisis. So the odds could be very high that gold has bottomed and that it's going to turn around from here. But I also believe that we're going into a global deflation, that when the markets crash, they can do all the stimulus they want, and it's not going to pump up the stock markets if there's a recession and earnings reports from all the companies are coming out worse and worse and worse. That just makes the crash accelerate, and it doesn't matter how much currency the Federal Reserve whips up and makes a gift of to all of the big banks. The markets will do what the markets will do, and that's that. But what I want to show you here is that there is a possibility that it could go lower. I've put in these areas where there was a lot of buying and selling these are support zones that go along with the support of the 50% retracement and the 61.8% retracement. There are a lot of buyers and sellers in this area. I believe that if gold drops below 1,000, that you may see futures contracts available for sale at those prices, but you're not going to see physical. There's going to be a huge shortage of physical, and we'll get to the reason for that in just a moment. You're going to see some supply-demand fundamentals that support my thesis here. But the price, this is the 61.8% retracement goes back to $889, and that's just a little bit above the $850 high from back in 1980. And so that, if you I don't have the chart here going back to 1980, so you can't see that high. But when the bull market was happening, when it hit $850 right there, it bounced off of it, and then it went up and broke through it, and then it came back down and bounced off of 850 three little times here, and then broke it, and then when it got through it again, it bounced off of it again as support. So that 850 is a very important support level. I do not think you would see it break 850. That's close enough to 889 to fulfill this Fibonacci retracement. And so that would be the minimum. But I have a feeling the minimum is already in just because of all the stuff that is happening in the world and people wanting to run to a flight, people doing a flight to safety. And there's two safe havens. There's U.S. Treasury bonds and there's gold. And the dollar will be the short-term beneficiary, as I've said over and over again, from this next crisis as people run into U.S. Treasury bonds, as you're seeing from those retail money fund charts that I showed you. People are rushing back toward that right now. But eventually they're going to realize that that is all smoke and mirrors also. And they're going to run toward the last safe haven investments, which is gold and silver. And so now I'm going to talk about global gold production. And so here's the data on global gold production. And this is 20 years worth of